Hello everyone. This video will talk about the importance of trend lines and trend channel lines in addition to the trades that were possible using the price action analysis patterns that I have been outlining. Okay, so let's begin. There was a gap up open today. Price gapped up above yesterday's high, which is this dark blue line, right? And it was a strong close, but bears immediately tried to take control, and they applied the pressure bar close bearish at the low of the bar. But again, bulls bought the close of this bar to and applied the pressure, but it couldn't get past bar 2's high, right? What you see next is there is a breakout above this II pattern. Bar 1 is an outside bar, and then two bars, bar 2 and 3, are inside bars within bar 1's range. So that's an II pattern. There's a breakout and there's a failure because bar 4 closed bearish. So you go short below bar 4, betting on this failure to provide you with a good profit. But that did not turn out that way. That's okay. It basically was a losing trade. You uh, have a loss of minus 10 points. This is a risk of 10 points, and I was looking at 40 points target. So you lost on this trade. Okay, that's fine. You move on. What you see next is now bulls bought below this zone here, below bar 2 and bar 3 is low, and push the prices up, right? So failure here on bar 4 and failure on bar 5. So there's a flip-flop price action, right? There's a lot of overlap. So you be careful here. Whenever you see such an action, you need to be careful on making sure you're not buying high and selling low, because this is now a range that has been formed, at least as of bar 5, and you need to be careful the way you trade it. You cannot buy high and sell low. I'm repeating that because that is so important for you to avoid over trading and getting caught up in wrong trades and letting your account bleed. So you see a failure on bar 6. Again, bar poked above this zone and it failed. Again, bar 7, it poked below and failed. Okay, so how do you trade such a zone? As I said, it's buy low and sell high depending upon the rule that is there. So you have to wait for the right opportunity. This is not a right opportunity to short here because it is so much into this zone, hardly any room left. This bar is a weak looking bar, even though there's a bullish close. It's into the middle of the range, right? So we wait for the right opportunity. It has to be really low in this zone or range, or it has to be really high in this zone or range for you to short. Bears took control. There is no give up trade here that you're looking in inside the range, because you, as I said, it has to be buy low and sell high, right? So no short here on bar 9. 10 is where support was provided by the bulls. Another attempt by the bulls to push up. It uh, made up with a tail on top, so it's not a give up. Don't take it, because we are not selling low. We are buying low, right? So that's exactly what is important for you to avoid over trading and getting into wrong trades. What do you see next? Bull supported here around this zone, so there's a kind of a double bottom that is being formed with bar 1 low. It's a very strong close. Now this is a good opportunity for buy low into this zone, right? I drew this trend line which is joining bar 1's high and bar 6 high, and then drew a parallel line here as well, depending upon how the price goes up. But that's what I do. I join the pivot highs and lows and understand how the price is reacting to these lines. It is very important that you immediately draw these lines, because they are important support and resistance areas, right? What you see next is the long on bar 12 triggered on bar 13. It was a decent close, right? Then bar 14, there was some weight when bears tried to apply the pressure one more time, but it was all soaked up and bar closed about this trend line, so it's a good sign, right? Then you see this bar, when it has a tail, which is basically this zone where it is trying to fail, bears applied the pressure one more time, but the bar managed to close bullish. On next bar, which is bar 16, there was an attempt, but it was a gap up opening between bar 15 close and this bar's open, right? And they just had a very bare minimum tail, which means bear pressure was soaked up, so you could go long above bar 15 for a scalp only because you join bar 1 and bar 10, these lows, and draw a trend line and draw a parallel to that, which is this line, which is where it was going to get the resistance. If you are trading into a resistance or a support which is close by, I'm looking at 20-point trades. Now here this is basically it into you're buying a low in the trading range zone and you had a room at least till here. So this was high was 327, right? And at least till here it was 355, and then in here it was 40 points on this bar. You basically made 40 points from this long trade, and then from this long trade you scalp 20 points at least, right? And then you give up the long trade, or you could hold the part position depending upon your preferences. But this is a resistance trade channel line, right? And there's a failure, weak looking bar, and then another weak looking bar for bears, attempt by bears to push, but bulls managed to hold the ground at least for a while. They try to push, but another failure. Now overall this is a spike up or gap up, and there is a channel that is developing, right? It's up to you whether you want to take counter trend trades. This is at a channel high, so it is okay if you can manage the trade well, which is very important. If you can manage the trade well, if you cannot, you don't want to go counter trend, skip it, because looking at this bar, you don't know whether it is really going to pan out this way. I mean, it is so fast, within just 2 minutes you got the 40 points, right? But it is hindsight. So if you cannot manage such trades, keep out. The bar, the bear pressure basically was soaked up again at the trend line. So trend line provided a support, trend channel line provided a resistance, right? So this is very important that you understand these things. Immediately bulls provided support on bar 24. It's a strong bar, so you see a nice close above EMA, which is a strong signal that bulls are holding the ground. They're not letting the channel uh, to be broken, right? And then you see this open on bar 25, bears try to apply the pressure tail. As soon as you see this, you anticipate it is being held. The bulls are able to hold the ground, and you go long above bar 24 high, or wherever this bar 25 open, right? Immediately, right? It needs a fast action, but that's all this trading is all about, right? You need to be able to read fast and take action quickly, right? So that means you went long at 331 point something, right? There was a good close on entry bar, but then 3 bars bear pressure was applied, but it was weak one. There was a breakout test on bar 20, but it was held above EMA, and then it kept pushing the prices up. This is a 10-point risk and 40 points profit trade because it was buy low, right? It was basically a buy low trade, right? So that's why we're going for 40 points profit target here. Now it got stalled at around this right. This is the resistance zone trend channel line. It failed again. Now this is after so many bull bars. Now if you are aggressive trader, you can manage the counter trades well. Go and short this trade and wait for your this support line, or you can keep riding it depending upon your profit booking method, right? So these were the trades that were possible in first 40 minutes or so. You could continue to trade further depending upon the setups that develop. There's one trade that I have mentioned here, which is basically it was failing at the trend line, and this trend channel line support was also weak. You could see that bears tried to break through, but it was held by the bulls. Then they scaled in, but they gave up here around EMA, and those bulls who had bought in here, they gave up. This was another attempt by bulls on bar 46. It was weak, right? So there were a lot of stops that were here which got hit. You can see this through this big bear bar. The moment this bar broke through 46 low or 45 low, it was a big bar. So a lot of traders were caught up, and the stops were hit, and that fueled the rally down, right? Of course, there was no follow through, but this was at least a quick 20 points trade. Why 20 points? Only because it is late in the move. The move started here. I want to take 40 point or trades, which is basically a larger swing trade that I'm looking at. I just need a quick one here. 40 point trades are basically as early as possible in the overall cycle or overall move, right? So that's it. Uh, Again, you could draw this trend line and the parallel line. You keep drawing these lines and see where price is reacting and how it is getting stalled. What is the movement around these levels. These levels are really important, that they really help us in identifying the support and resistance zone, as well as they help us in profit booking. Okay, so I hope this helped. Thank you for watching.